I've been actively trading for 4 years and I still remember the time and money spent trying to grow a small account and failing. To be a good trader, you do not need a lot of capital or complex strategies to make money in the market. All you need is one simple strategy that you can focus on. I can make anywhere from $300 to $1,000 per day with one simple strategy. But all this did not happen until I started risking $50 to $75 per trade and slowly scaling up my trading account. In this video, I will be showing you the best system to start trading with using a simple 3-step process so that you can find high probability trades that can help you grow your trading account. Why do most traders, especially those with small accounts, lose money? Number one, fear of losing. You don't have much, so you hold your winners too long, or you fail to hold those winning trades long enough so that you can be profitable. And the third one is one I see very often is you trade lower probability setups. So at the end of the day, you're just spinning in cycles and you're wondering why trading is not working. But in this video, I'm going to go over how to find the high probability winning setup so that you can stop relying on people to take trades. You stop following your mentors with big accounts when you're trading a small account and you don't have enough capital to stomach the amount of losses that they're able to take. If you're trading a small account, you need to be very selective. So now, how do you find those high probability stocks to trade? I'm going to be showing you in 3 simple steps, but it just involves putting all the fundamentals of trading together, understanding how the market moves. We know that the market is either trending or it's in a range. And when do we want to be taking nice trades? We want to be taking it when it's trending or when it has broken out of the range. Now, what is the system? We have 3 simple steps. Step number 1 involves stock selection. Stock selection is the key to high probability trades. If you choose the wrong stock, you've reduced your odds. Trading, it's all about odds and probability. So knowing which stock is trending, which stock has positive news or negative news that you can then take advantage of and trade in the direction that the market is pushing towards. And then you can then, okay, move on to, oh, what is step number 2? The system backbone. Without this, you are trading blind. You need to understand key levels. Every day in my free community, I drop my daily watch list. You can click the link in the description to join. I give what I'm watching so that you know where to get involved in the market. Now, when you know the key area of interest that you are watching, key area, that then shifts probability to your side even further. So you have step number 2. But you can't make money without step number 3 if you don't know how to execute trades. In the examples I'm going to be going over, I will show you 2 entry models. 2 entry models that you can use and walking you through 2 different scenarios that are high probability setups because one, not only did we select good stocks based on the analysis, it also had catalyst backing one of the examples, and then I was able to identify the area of interest where buyers are able to come in and support the price in the direction that you are watching. And step number 3 does not happen if one condition is not met, and that is where the opening print is. In the examples, I'll go over showing you that if the opening print is below the price level you are watching, then you can buy. But if it's above and we are downtrending, then you're looking for sells. If the opening print is below the price you are watching and we are trending up, you're looking for buys. Watch the example. If you have questions, please leave a comment below. I would answer all your comments and you can join the free community and ask me questions there. Example number 1, first things first, is to identify the stock you're going to trade. On this name here, you can see that it's in an uptrend. It's looking like a nice wavy staircase. But the most recent action here is it's a clear uptrend. But there's something I want to mention, and again on this channel, is that the market moves in 2 phases. It goes from a clear trend to a range, and then it trends again. And as you can see on this chart right here, the market moved in an uptrend, and then it started to range. Now we want to see, like, in instances like this, assuming you don't see this candle action, what it did here, you want to see if it breaks up, then you take the trade, the retest of the highs right here, or if it breaks down, and then you take the retest of that breakdown level. In this case, it gapped up, and then it started to do what again? Rest, trend. It started to range, and as you can see, it created a nice range, nice range. Now, what do we do? What do you think is going to happen? We are going to wait to see if it then breaks. We're going to wait to see if it breaks to the downside and fills this gap that it created, or if it continues higher with momentum. In order to see this clearly, you then want to move down to the lower time frames to see what is happening. As you can see on the lower time frames, it is ranging, it's consolidating. Now we are going to go down to the 1 minute time frame to find entries. You can also execute this on the 5 minute time frame. There's no file, but I tend to enter trades on the 1 minute time frame because it gives you accurate and sniper entries, and you're able to manage your position better. I found more success on the lower time frames. Everyone's different. You can execute your trade on the 5 minute time frame as well. It also works. If you want me to make a video showing you how to still execute trades on the 5 minute time frame because maybe you want slower price action, let me know. Now I'm going to play this out, and we're going to try and find an entry on this name. As you can see here, 5 minutes has just passed, but we don't want to enter yet because it's not clear what direction it wants to go. Now, something I want to mention, we are not going to execute this trade if price ends up breaking below the opening print. So if something like this ended up happening, maybe the market opened up here, we saw candles come down to retest this level. If you are a beginner trader, it's best not to take this trade because there's a chance that it could have failed. It's much trickier. It will be tougher to handle this trade because what you'll be looking for is basically a reversal to then get price above the opening print. You'll be looking for a reversal trade for price to then do a U-turn and get above this opening print level, then retest it. So the condition is that you want price to be above the opening print. You have a small account, you want to be very picky with your trades. You want the highest probability trades. So let's continue to play this out to see if we find an entry. You can see, as you can see here, nice price action. Price is holding the level. We're then going to enter this trade, and our stop loss, trading view tools, weird. We're gonna enter this trade. Our stop loss would be just below this swing low, which is the opening print. If it fails the opening print, that trade is invalid. And then you want to look for the 1:2 risk to reward. And you're going to then play this out to see what happens. As you can see, you ended up making money on this trade. You hit your target and more. If you are someone that got scared and exited this trade because, oh, it started working, it went above the high of day, and then started to come back down and you exited this trade, please, please, please trust this setup and allow the trade to work out. As long as it has not stopped you out of the setup, hold your position so that you can catch big moves. I personally would use options to trade this name because option contracts on this name will be around $2.50, which is equivalent to $250 per contract. So it'll be about $250 per option contract. Assuming you took $88 calls on this trade, you would have made about $100 per contract using $250. Isn't that great? Of course. So if you have $1,000 account and you had one contract, you've made 10% on your account in one trade. That's fantastic in my opinion. Example here, you can see that Microsoft is clearly in a downtrend, but something interesting started to happen. Like I said, we always go from trend, range, and then we trend again. And as you can see here, Microsoft is breaking the lower high that it formed right here in March, and it started to range. That's sign of a change in character, but we do not get involved yet. So we want to go on to now step 2, which is identify your area of interest, which is the backbone of this system. You want to then mark out the low and high of that range, and you're going to wait for price to break down or above for you to look to take a trade. And now you're going to look, okay, what is the objective that this name has to fill if we end up getting this move above this 433.67 level? There is a what gap to fill here. So there's even an objective. So this one, if you able to capture the trade in either direction, you would be able to make money, because if it breaks down here, it could move lower to 356 and you'll be catching a big move. And for a small account, that's massive. So now we're going to go down to the lower time frame to enter the trade on the 1 minute time frame. And I'm going to play it out. And as you can see here, on this day, you're seeing that there's a chance that this 433.67 is going to break. Now let's play it out and see. Market opened and it broke up to the upside. Now you're seeing it's clearly in an uptrend. It's clear. 5 minutes has passed. How do we want to enter this trade? I'm going to show you another entry model that you can use to take trades, which is using the order block, or like some people call it, the one candle rule. Down close candle that formed here in this uptrend push, strong buyers coming in. You can mark this. You can see this red candle. What you want to do is mark the from the top of the wick to the open of the red candle. You're going to mark it. I'm going to change the color of this rectangle so that you can see it. I want it, my bad, this is taking time. What color can we use? Red. Okay, let's just stick with that. But if you can see it, that would be great. That's great. So we have marked it out clearly for you to see. I'm then going to wait for price to come into this area, hold, and then continue higher. If you're trading options, you want to take the 439 or 440 calls in this case. And like I said, you want to see that the opening print is still holding. In this case here, you see that the opening print is right here below. So the criteria to execute this trade is there. It's a clear trend. Opening print is below where you want to enter. So that's good. And price has broken above the level you want. So I'm going to play out this tape and see what happens. Okay. So strong candle price action. Great. What we then want to see next, buyers are stepping in. You then want to enter this trade once this candle closes, and your stop loss will be right below this area that we've marked out using the one candle or order block entry model. I've shown you an entry model using a break and retest. I'm showing you another entry model you can use to enter trades. Now we're going to target a 1:2 risk to reward. And like I said, take 440 calls if you trade options. Microsoft's too expensive to buy one share. Now we play it out and see what happens. You can see, if I move this, you can see that price is respecting the order block. It shows that that area is very strong. Did you get stopped out? No. Let's see what happens. You ultimately hit your target at the end of this trade. Now, if you have one contract, don't be too greedy or nitty-picky. You see that you got the move, you broke above high of day and you got a move, you sell, you take your profit. If you have multiple contracts and price is still respecting and holding your entry, you can still hold on to this trade and you capture a strong 5-point move. One contract would have paid you more than $200 on this trade. So, and usually one option contract on Microsoft is around $300 to $400. Imagine you get almost 100% return if you followed all these steps. Thank you so much for watching. I really appreciate your support. Please leave a like, comment, ask me questions. Feel free to join my free community so I can continue to bring free value to this channel and you help me grow. I appreciate your time. I'll see you on the next one.